The journey of Bitcoin wasn't just about technology. It was about challenging the entire financial world order. Dive deep with us as we unravel Bitcoin's untold story. From 2001 to 2006, a time of unprecedented growth and prosperity.
iPod in 2001 changed everything about music. And we're going to do it again with the iPhone in 2007.
Technology was changing the way we lived. Companies like Google, Apple, and Amazon were just beginning their ascent. Jobs were abundant, the promise of the American dream seemed within everyone's grasp. The stock market soared to new heights. Trust in banks was at its zenith.
Unemployment is low. Inflation is low. Wages are rising. This economy is on the move, and our job is to keep it that way, not with more government, but with more enterprise.
The economy seemed unstoppable. In the early years of the 21st century, the global economy stood on the precipice of digitalization. There was a whisper of a coming revolution. In the confines of a cluttered office in 1983, American cryptographer David Chaum envisioned a world with private transactions shielded from institutional scrutiny. He proposed the audacious concept of cryptographic electronic money. Although many projects inspired by Chaum emerged, they withered away, unable to overcome the challenges of an analog world. However, his emphasis on decentralization seemed to foreshadow an incoming future that nearly took down our entire financial system. A system where banking institutions towered over cities, their shadows representing a looming centralized power. Lurking beneath this facade was the ticking time bomb. Subprime mortgages. Banks hungry for profits had lent vast sums to homeowners who couldn't possibly repay. These loans were rebundled and resold as financial products, spreading like a dormant disease throughout the global economy. And eventually, the housing bubble burst. Like dominoes, institutions began to fall.
Lehman Brothers is going bankrupt, and financial markets from Asia to Europe are doing their utmost to prevent Monday from turning from dark to black.
Lehman Brothers, a banking titan, declared bankruptcy. Banks once considered too big to fail were on the brink of collapse. The 2008 financial crisis. Unemployment soared. Homes were foreclosed. The world was staring at the abyss of the worst financial collapse since the Great Depression. The ripple effect was profound. If the banking system fully crumbled, economies worldwide would plummet, leading to unprecedented job losses, poverty, and despair. People's life savings vanished overnight. Trust in the financial system was shattered. Governments scrambled, money was printed in vast quantities, and bailouts were sanctioned to save the sinking ships. Public trust in traditional banking was shaken to its core. It was amidst this chaos and distrust, an opportunity arose. Emerging from the depths of the digital realm, an anonymous figure named Satoshi Nakamoto released a document, Bitcoin, a peer-to-peer electronic cash system. Unlike previous digital currencies, this system promised a decentralized network, eliminating the need for banking intermediaries. Satoshi's creation was more than just a technological marvel, it was a statement. Encrypted within its very first block was a message, a newspaper headline about a bank bailout. More than just a timestamp, it was a defiant nod to the crumbling traditional financial system and the genesis of a new digital asset. A response to an unstable financial system, a global system that's printed 25 trillion since 2008. It helps fix financial crises in the shorter term, but can cause issues down the line like inflation or currency debasement. Basically, if supply of money increases, but supply of goods can't keep up, there's going to be more money chasing the same amount of goods. Prices rise in response. It ultimately robs us of our purchasing power and lowers the value of our money. Bitcoin was promoted as a decentralized solution, a long-term alternative to banks and traditional currencies. January 2009, the digital realm witnessed the birth of something revolutionary. The Genesis block was mined. Word spread, an underground movement was gaining momentum. 2010 in Florida, Laszlo Hunyaks hungered for more than just pizza. He hungered for proof. With a few clicks, he traded 10,000 Bitcoins for 2 pizzas, proving Bitcoin's tangible value to the world. In its infancy, Bitcoin's reputation faced a serious challenge by its association with the Silk Road, since it was one of the first platforms to introduce many to Bitcoin, but it's an underground marketplace infamous for illegal transactions. Media outlets were rife with stories linking Bitcoin to the underworld, and during the US government's crackdown of the Silk Road that culminated in the arrest of its founder, Ross Ulbricht, in October 2013, to many, Bitcoin became synonymous with the dark web and illegal activities. But here, context is critical. While Bitcoin had its shadows, it's essential to note that the vast majority of illicit transactions worldwide are still conducted using cash and not cryptocurrency. In relative terms, the percentage of Bitcoin transactions or illicit activities pales in comparison to the illegal dealings using traditional money. Just like the internet had its misuse and issues in its early days, Bitcoin too faced a tidal wave of skepticism and resistance. Skeptics called it a fad, a bubble waiting to burst, and many in the financial world scoffed at the very idea, dismissing it as an anarchist plaything. Governments around the world wrestled with the challenge: how do you control something that refuses to be centralized? While some nations banned it outright, others grappled with ways to incorporate this new form of currency. As cryptocurrency gained traction, so did its adversaries. Traditional banks, fearing obsolescence, lobbied against it. Governments sensing a challenge to their sovereignty tightened their grasp. Crypto mining operations were shuttered. Strict regulations choked innovation. News of hacks, scams, and market volatility led to sharp declines. In 2014, the Mt. Gox exchange, handling over 70% of all Bitcoin transactions, was hacked and over 850,000 Bitcoins disappeared, worth an eye-watering $24.3 billion in today's market. Fast forward to December 2017, Bitcoin reached nearly 19,800, only to drop dramatically to a low of 6,200 2 months later. Many pronounced the death of cryptocurrency. Despite the challenges, Bitcoin's resilience shone. Each crash was followed by a recovery, surpassing previous all-time high prices. Industry giants were initially hesitant. Goldman Sachs called cryptocurrencies not an asset class. MasterCard CEO attacks Bitcoin, or they outright are damning. JP Morgan Jamie Dimon slams Bitcoin as a fraud. Bitcoin is a massive scam by former PayPal CEO Bill Harris. And Mark Cuban says he'd rather have bananas than Bitcoin because they're more useful. But as technology evolved and exchanges matured, skepticism turned to interest. Things began to change. Goldman Sachs ranks Bitcoin as best performing asset so far this year. PayPal is diving deeper into crypto by launching its own cryptocurrency, its own stablecoin. Ray Dalio says allocating up to 2% of your portfolio to Bitcoin is reasonable. Fidelity's new 401k offering will give you the chance to invest in Bitcoin. Mark Cuban now wants to buy more Bitcoin and says that gold investors are dumb. Visionaries like Michael Saylor, Jack Dorsey, and Cathie Wood began to see its potential. Cathie Wood's prediction of $1.5 million in 7 years. Jack Dorsey quits Twitter and has more time to focus on his passion of Bitcoin. Michael Saylor's MicroStrategy now holds over $4.6 billion worth of Bitcoin. MicroStrategy's billion-dollar investment signaled a major institutional endorsement, and even the Fed acknowledged Bitcoin as a long-term asset. But it wasn't just the institutions and the visionaries. Everyday investors also championed Bitcoin's rise. Nations that once banned it, like China, were now seeing grassroots adoption. Countries were adopting Bitcoin.
Lawmakers in El Salvador broke into applause after voting to approve Bitcoin as legal tender on Wednesday, making the Central American country the first in the world to fully adopt the cryptocurrency.
It was a revolution. While Bitcoin blazed the trail, a myriad of other digital currencies emerged in its wake, each attempting to carve its niche and demystifying the crypto ecosystem. The once ridiculed and doubted crypto industry had become a formidable force. Even in today's down market, the cumulative value of all cryptocurrencies is an impressive $1 trillion. From the brink of rejection to the pinnacles of acceptance, cryptocurrency had not just endured, it triumphed. What began as a dream, a mere whisper in the digital corridors, has now echoed across the globe, redefining our understanding of value, trust, and freedom. As we stand on the cusp of this new era, one thing is clear. The story of Bitcoin and cryptocurrency is just beginning. A financial frontier vast and uncharted beckons. The world is watching, waiting, and wondering, what's next? Subscribe if you enjoyed this video, and if you like this video, I think you'll like watching this video next.